major markets climbed higher into the final month of a tumultuous year, with new all-time highs in the Nasdaq, S&P 500, Dow Jones Average, and the MSCI World Index. This leaves the MSCI Emerging Market Index, the one component of the major markets without new all-time highs in some time. The Nasdaq took the winning spot with a gain of 2.1%, but the S&P 500 and emerging market indices were not too far behind, as all 5 of the major markets generated at least a percentage point gain last week. The gains in the markets were energized by positive returns in 9 of the 11 sectors, as only utilities and consumer discretionary fell into the red. The root cause of these gains was elusive last week, as there was no single identifiable driver, and the economic data reported was mixed. Pending home sales fell 1.1% in October after falling 2% in September. Construction spending rose, beating expectations slightly, with an increase of 1.3% compared to an anticipated 1%. On Wednesday, the ADP employment report showed 307,000 jobs were added in November. This fell short of forecasts that averaged around 440,000. Friday's BLS employment report was expected to come in at a similar level. However, the actual initial estimate showed only 245,000 jobs were created. Nonetheless, the unemployment rate fell down to 6.7% from the prior reading of 6.9%. The lackluster employment results going into the final weeks of this year's congressional session gave some movement to the idea of an additional stimulus package. However, details have been vague and ever-changing, with little indication that another round of checks will take place at this time. By the end of the week, Treasuries rose as the yield curve steepened. The 10-year ended Friday at 97 basis points, up 13 points from the prior week.